Good morning, Facebook and YouTube friends. Give me just a moment to get things set up for my Zoom, and I will be back with you in a moment. Good morning, Zoom friends. All right. Facebook, YouTube friends, I am flying solo this morning. So I will circle back to answer any questions in the chat box, but it's kind of hard for me to monitor both chat boxes. So I'm going to be focusing on Zoom to start. We're going to fly through things today. My apologies. This is a new format for me, so have not actually been through these slides yet. My teammate just produced them the other day. So we're going to go through this together.
Recording in progress.
And if anybody ever would like a copy, we actually stream this to YouTube and Facebook. You can go out to Own the Roof on either platform and go into the live events area, and you can catch all the replays. And then anyone, if you ever sign up for any of my webinars, whether it's the credit boosting or how to purchase with just a few $1,000s out of pocket using down payment assistance programs and grants, those webinars are also out there as well. Anytime you can't make one of my webinars and you're signed up for it, you will automatically get the replay. So, and if you ever have any friends, family, please do me the honor, pass my name and number along. Always love to pay it forward, offering as much education as I possibly can, just to teach people ways to get into home ownership with very little money out of pocket. So many people are giving up on that front. It is a passion of mine. So especially, gosh, about 12 years ago, I had a life-altering event and had to start over. And after, rather than bore you with the details, but after that event, I had to rebuild credit. I had to redo everything. And I can promise you, 12 years ago, it was a heck of a lot harder to do than it is today. There are so many credit tools out there to rebuild credit. And now I work with this database of over 2,500 down payment assistance and grant programs across the country that will enable people to purchase with just a couple $1,000s out of pocket. And you don't need perfect credit. So there's nothing about perfection anywhere inside of what I do and how I help people. So regardless of your situation, I always tell people, book a call with me. Whether it's 2 weeks, 2 months, or 2 years makes no difference to me. My team and I are always here to help. So with that being said, let's get in today's webinar, how to purchase with just, today, how to boost your credit score 60 points in 60 days. Excuse me, 1 second. Okay, let's jump right in. So from what I understand, I got a lot of slides to go through here, so I apologize. Hope I'm not going to make anybody any more dizzy than I will be flying through these. So let's start over here. I just went through these for the first time, and here we go. Well, let's go back. And okay, so what we're going to learn today are the best practices on how to get your scores up 60 points in 60 days. So for the most part, there are several low-hanging pieces of fruit that can really help boost your credit scores. We're also going to teach you how to build new credit if you have no credit. So it's actually not too challenging to actually get someone approved to purchase a home when you have no credit. We just need to build stuff, and it can be done in a very short period of time with what we call alternative trade lines. So I'm going to go over all of those today. So first, I like to start out with understanding the industry. What goes on in the credit industry, and how does that apply to the mortgage world? So there are actually lots of credit bureaus. There are three big ones that we want to focus on. Okay. And their scores typically will range anywhere between 300 to 850. For me, I always tell people, as long as we can get you at 600, that's kind of the strike zone. Although I have a few programs that will go as low as a 580. And depending upon the time of year, if there are some grants out there, I can get people down to 540s, depending upon the size of the grants and the amounts of the down payment. So on a case-by-case basis, there are lots of ways to get deals across the finish line. That's basically my specialty. I learn people's situation, find out what money is available, how can we apply it to get approved for an underlying mortgage, and get people across the finish line. So keep in mind, lots of credit scoring algorithms or scoring models out there. Ideally, we want to focus on TransUnion, Equifax, and Experian. Those are the big boys, okay? They control the mortgage world with regards to the algorithms and their credit scores. So we are always trying to appease and manipulate these three platforms and the scores that they provide through FICO. Now, as you're looking at things, typically, I would say, who needs credit building? Well, people, if your credit scores are 500 to 600, you probably need a little bit of help. Not a lot, just a little bit. We need to get you up to that strike zone. Or if you have no credit, we're going to show you the different ways to build credit, put credit in your name. If you had a recent bankruptcy, repossession, or collection, we're going to cover that today as well, too. And again, like I said earlier, if this is designed for anyone that just wants to understand how credit applies to the mortgage world. So why build credit? I mean, for obvious reasons, it affects a lot of things in life. Rental markets for sure, obviously home buying, and a lot of other things. It's amazing how much people overpay for not having good credit. It doesn't sound like a lot, but hey, if your credit cards or your auto loans are pegged at 25% versus, think about it, 12%, you're paying twice as much. Think about that over a lifetime. Tens of thousands of dollars tossed out the window just by not having that credit score. So, and there's a lot of misinformation out there. So, for example, when you go out and look at your credit report, there are a lot of mistakes out there. So we're going to teach you how to capitalize on those as well, too. So, and the other thing I want to tell people is a lot of these things you can do for yourself. I'm actually developing another course that actually might replace this, because the way AI has entered the credit repair place, the credit repair companies, they're done. Okay, there is no reason to pay for credit repair anywhere. And what they've been overcharging people for years is criminal. So with that being said, it's not challenging to go out to freeannualcreditreport.com. Okay, that's freeannualcreditreport.com. That's actually a website that is all three credit bureaus have to be on, the big boys. They have to give you a free copy of your credit report. So it is legitimate. So if you go out there and do a search for your credit report, if anybody ever charges you, don't go there. Just go to freeannualcreditreport.com. You get one copy a year. There are ways to actually take that credit report. Once you get it, download it, save it. You can upload it to ChatGPT or OpenAI or Claude, Anthropic. So you can upload your credit report to these AI agents and ask them to analyze your credit report, find any possible conflicts, and issue any suggestions to make some quick adjustments or repairs, and please draft letters for anything that is deemed incorrect. And you just can go back and talk to these AI bots and have them draft incredible letters that you can send out. So there's no reason to engage the services of these credit repair companies anymore. So hope to have that done in the next 30 to 60 days with regards to how to do that. So with regards to setting goals, I always tell people today is ideally designed to get your credit scores up 60 points in 60 days. That's it. So we're going to teach you the strategies that I look at, how I read a report, and what I tell people to do. We're also going to show you how to add new credit, like I said before. So we need As much as it is about fixing your old credit, if you have a credit score that's in the low 500s and fix all your credit, it's only going to go up so high. I find that a lot of times people might cap out about that 580 mark. And that's why I really don't like the credit repair industry, because they only focus about taking care of the negatives. In my mind, it's just as important to take care of and build new credit at the same time. It's a 1-2 punch. If all you do is take care of the old stuff, you're going to get stuck right around 580 to 600. If you do the old stuff and build new credit with a secured card, secured loan tools I'm going to show you in a few minutes, you'd be surprised how quickly you can get your scores up into the mid 600s. Also, we're going to teach you how to identify areas that are ripe for quick boosting your score. And I'm going to give you a timeline. How long does it take each one of these things to settle in and actually work to your benefit? Okay, so like we talked about, 3 big credit unions: TransUnion, Equifax, and Experian. Okay, we are going to focus on the scoring models, which are the FICO score. Okay, there is a Vantage score. That Vantage score is the free score that you get when you go out to Credit Karma or Credit Sesame or any free platform. They typically do the Vantage scores because they're free. Okay, that is a different algorithm. Okay, so what I find is typically if you have a 650 credit score on maybe Credit Karma, your credit scores might come in about 630 in FICO. Okay, that's not 100% accurate, but for the most part, you'll find that there's like a 20% discrepancy. Now, the Vantage score tends to report things or count fresh things into your credit scores right away. FICO scores, not so much. Could take 6 months before it really affects your credit score. So there's a reason you want to get started on a lot of this stuff right away with regards to the FICO scores. Typically, like I said, your scores are going to range anywhere between 300 to 850. Okay, most of the people that I work with might see anywhere between mid 500s in that area. If you've got stuff below 500, it is a very hard road to get it from 400 or 500 up to 600 in a short period of time. Time is something that we need when we have scores that low. All right, there are 3 different scores, obviously one for each credit bureau. We are always going to focus on the middle and the high score. And the reason that is, the programs that I work with typically are going to grab your middle score. Okay, there are some new products out there in the lending world that will average the scores. Okay, those are the exceptions to the rules. The down payment assistance programs and grants that I tend to work with or help people connect with, those ones are always looking at the middle score. Okay, so keep that in mind. So when it comes to your credit report, we want to identify what is that middle score, what's the high score, and do we need to work on 1 to get it to the strike zone, or do we need to work on 2? Okay, so once we identify those scores, then we know what credit reports to focus on getting things manipulated. Because that low score, that credit report that isn't there, unless there's some crazy collections on it, we don't care about it as much. Okay. And as some of these credit agencies report to the credit bureaus, they're only many times reporting to 2 or 3 of the credit bureaus. They don't report to all 3 because they have to pay to do it. So it's only the mortgage world that does it. There are a few others. So a lot of times when you go to some of these credit building tools, they'll report to all 3. So you want to make sure when you're signing up for a credit building tool, be it a secured card, secured loan, make sure it reports to all 3 credit bureaus so you're getting the best benefit of it. All right. So ideally, we want to get you, for me, that strike zone is anywhere between 600 to 640. That's the strike zone that we want to be in to get you into the area where you can qualify for down payment assistance and grants. Now, if you have credit scores in the high 600s, 700s, that opens up a door of a lot of opportunities. Then we can actually start stacking grants. So for any of you that were at my Zero Down webinars that I do on Wednesdays, I actually have one coming up this Wednesday. That one, we go over all the different options. So, and I show you how some people with credit scores at 700 were able to stack, a $25,000 grant 3% towards a down payment for another grant, a $5,000 closing cost grant, a $500 appraisal grant, a $350 inspection grant. We can stack all of those things up for one home. But your scores have to be up in the high 600s, so low 700s in order to accomplish those feats. Okay, the factors that go into a credit score. Payment history, the big one. 35% of what goes into your credit score is based on your credit history. If you have any recent late payments, that's the key. If it's over 12 months, those don't affect your scores nearly as much. Anything recent, that's a game changer. Okay, so anything that's delinquent right now, we want to bring those current as soon as possible. It's not crazy to call creditors too. I had somebody last month had a late payment with Toyota. They actually made a phone call. It was a 60-day late on Toyota. And it was a one-time thing. Went 60 days late. She had a death in the family, brought it current. She'd been with them for 3 years. Toyota didn't remove it, but they changed it from a 60-day late to a 30-day late, and we were able to get her approved. Okay? So don't think that it's impossible to call creditors that you have late payments with and ask them to remove it as a one-time courtesy. Now, if you have habitual late payments, it's not going to fly. And a lot of times the people that you talk to, the phone jockeys on the other end, that's the first line of defense. Their answers are almost always going to be, sorry, sir, we can't do that. Your response should always be, thank you very much. I appreciate your time. Can I speak with a manager? And then just climb the ladder that way. Okay. Be nice about it. Okay. Most of them, if you get the right person, they will accommodate. And just because you don't get the right answer today doesn't mean it's not worth another phone call tomorrow. All right. Next thing, 30% of what goes into your credit score is utilization. Utilization is the amount that you owe on a revolving line of credit. So you have a credit card, okay, and you have a $1,000 limit and you owe $500. That's a 50% utilization. Ideally, we want to get that utilization below 30%. That's kind of like the best bang for the buck. If you can get it below 10%, even better. I always tell people, if you are using credit utilization is an incredible tool for manipulating credit scores. If you can get your utilization from 100% down below 30%, that accounts for possibly I'm seeing a 40-point bounce for a lot of people just from that one maneuver. And the only thing that I can attribute it to is right now, we are seeing the highest level of revolving debt in this country's history. And as a result, we're seeing delinquencies skyrocket. So if you have the ability to pay down a credit card below 30% in a market where credit debt is increasing and delinquencies are increasing, you're considered a better risk. As a result, these algorithms are almost responding in real time to give people a little bit bigger lift than normal. It used to be 20 points is what I would count on. Now, 30 points. And I've seen a few instances where people can get 40. So credit utilization is actually 30% of what goes into your credit score is based on your utilization. So it is a big portion. So don't discount that. Next thing, length of credit history. Okay, if you've got some old accounts on your credit that you don't know what they are, but they're open, and don't close them. The amount of time that you've had some of your credit in place is another lift in your credit score. Okay, so if you see accounts that are out there and they're not negative, whether you know of them or not, don't close them. Okay, I had a old Sears account that my wife brought into our marriage from probably 35 years ago. And it's still, I just leave it there. So there's no reason for me to close it. Never used it. I think I got a card way back when we got married, but it shows 30 plus years of activity. So no reason to close it. Okay. It's a positive. Next thing, New credit inquiries. They don't really hit your score nearly as hard as people think it does. Okay, they do stay on your report for 2 years. It can drop your scores 5 points. After a year, it doesn't really play into the credit scoring. It doesn't affect your credit much. So don't sweat the credit inquiries. Now, a lot of times people will see multiple inquiries and they think that that's just killing their credit score. It's not. Okay, especially if it's all done at once. Every now and then you'll go into a car dealership and you'll get some of these finance guys that basically they call it shotgunning. If someone's credit score is on the borderline, rather than take the time to send it out for approval at one lender at a time, they shotgun it out to 15 lenders. They do it from their desktop, from their computer. Just click all 15 lenders, hit send, bam. Next thing you know, you got 15 inquiries on your credit. It looks like it's, killing your scores. It's not. It's only going to affect your score one time and drop your credit score maybe 5-10 points. Okay. The credit scoring algorithms are designed to let you shop for credit. So if you're shopping for an auto loan, I'm not sure what it is, but I think it's a 15-day window. It might be as much as 30. It gives you time to shop. Okay. So any credit that's reported from a automotive sector on your credit isn't going to adversely affect your credit if it's all done within that certain window. Okay, so don't overthink that any more than you have to. All right. Next thing, types of credit accounts. Credit diversity is another thing that will give you a little bit of a lift. Not a ton, but a little bit. So if you have a couple of credit cards, an auto loan, maybe a personal loan or a mortgage, that credit diversity is going to give you a little bit of a lift. Okay, so keep that in mind. Another thing, and top of mind for me, but not on here, or I didn't see it, was do not pay off any accounts prematurely if you have what we call a thin credit profile. So if you've only got 3 things on your credit, maybe a couple credit cards and an auto loan, and I've got 4 payments left on my auto loan. Oh, great. I'll pay those 4 payments. It'll show off as paid on my credit and my scores will go up. It doesn't. You're going to lose a trade line and your scores could very well go down. Okay. So don't prematurely pay off any fixed debts unless we talk first or unless you're advised to do so by a trained professional. Okay. Payment history and its impact. Like I said earlier, payment history accounts for 35%. No late payments in the last 12 months. If you have an isolated 1 or 2, we can sometimes explain those, but that's key to getting approved for a lot of the programs I work with. Like I said, call the creditor, try to hash it out. Do not pay off collections. This is a big one. Okay. If you have any collections within the past 90 days, we might want to pay those off right away. Okay. Your scores won't go back to where they were before the collection, but you can get a lift out of it. Now, if you have collection accounts over 2 years old, please don't pay them. Okay. Make sure you remember this. Any collection accounts over 2 years old, we want you to consult a credit professional before you do anything with them. And the reason is, imagine you've got an old, heck, I had somebody the other day, $300 from a cable company, didn't return one of the boxes. Obviously, they gouged them and still sitting out there. Over 2 years old. She was about to go in and pay that off. Well, what happens is you take that old collection and pay it off. You're going to reactivate it. It's going to show up on your credit report next month as collection paid X amount of dollars. Okay. It's going to drive your scores down 20 points or more. So don't pay off those collections over 2 years old. Collections 6 months to 1 year, we want to talk about those, whether or not to, do anything with it. A year to 2 years. Sometimes if they're over a couple $1,000, we might want to try to get some repayment terms. Ideally, what I tell people is we want to analyze each one of them. And more often than not, If it's over 2 years old, obviously we want to leave those there. I am actually getting people approved with large collections over 2 years old lately, provided it was an isolated incident. Everything else is kind of like a case by case basis. And if we're not sure what direction it's going to go, we'll probably ask to run your situation through a simulator to make sure that we're not going to make any mistakes there, because collections can get very, very tricky. And sometimes we'll find collections don't know what they are. They're from years ago. I mean, some of these collection companies do very shady practices. They'll report it even after the statute of limitations is expired. Crazy. So I find that collection accounts trip people up. So you're probably going to hear me talk about that a few times today. Next thing, credit utilization stages. Okay, remember that credit, we want to keep that credit utilization below 30%. Okay, there are some strategies out there and I manipulate those balances in a very short period of time. So what you want to look at is try to go to your statements and see what your closing date is. Or better yet, if you go out to Credit Karma and click on your credit card, you'll see what the reporting date is. And that's the date that they report your information to the credit bureaus. So imagine you've got a credit card, $500 limit, $500 balance. It's hurting you. Or worse, suppose you're over your limit. That happens. Okay. You don't make your payment on the due date or the date that they report it. And next thing you know, you're over your limit. That hammers your credit scores. But if you take and pay down those cards under 30%, right before they report that, before that date, they're going to report that under 30%, you're going to see your scores shoot up. And the reason I stress that is a lot of times a lot of people I work with don't have extra money. Okay. I'm used to working with people that buy homes on shoestring budgets. And what I mean by that is below a couple $1,000s. So what I coach them to do is, because I get it, still need to put groceries on the table. So tell people, pay down that, find out what that date is, pay that balance down a few days before it's reported. So it clears. They report that low balance. And then a week later, bam, you can use that credit card again if you need to go out and buy groceries or do certain things with it. So that's the kind of cheat code or workaround that I tend to share with people. So make sure you try to get those balances under 30% utilization. And like I said, you'll probably see a good 30-point bounce. I've seen a couple people up to 40 points if you have a thin credit profile. Okay, so length of credit history, we talked about that earlier. Do not close accounts prematurely, or do not close old accounts thinking it's going to boost your credit score. It typically doesn't. Those old accounts actually help you, and when you lose that trade line, your scores can go down. Like I said earlier, avoid paying off car loans completely, especially if you have a thin credit profile, your scores will go down. Okay, student loans. Okay, it's important. If you have student loans and they're in default, you want to reestablish repayment terms as quickly as possible. There is what they call a fresh start program or fresh start initiative. Each one, they call it a little bit differently. But what it is if your student loans are in default right now, so in other words, everybody was pushed out of forbearance from COVID last summer. If you didn't set up any payment arrangements, you might be in default right now. So if you have a credit score, let's just say it's at 550, and you have student loans that are in default, and you call them, set up payment terms, okay? You can do it on a zero income payment plan, okay? I'm not a fan of that one. I'd like to see some payments out there because it helps us on the mortgage side, gets you across the finish line. But what's going to happen is you are going to go from, if you start those payments, make them for 90 days on the Fresh Start program, your scores could go from a 550 to a 650. They'll take that negative default rating on your credit report and flip it over to a positive, which is paid as agreed. So the negative's all gone and now it's a positive. I've seen people have a 100-point swing from that maneuver. Okay, So, I want to go back. I want to focus on student loans just a little bit more. So, if you are in default, we talked about that one thing. If you're in forbearance, means you're in school. Now, if you're in hopes of purchasing a home, we need to pull those loans out of forbearance. We need to get repayment terms. You can get repayment terms based on whatever you want to negotiate with your loan servicer, or you could try for income-based repayment plans that could get your payments very low. Sometimes they'll even say your income is so low, you don't have to make a payment, it'll be zero. Please don't do that. Your interest clock just keeps ticking and ticking and ticking. I always tell people, tell that student loan servicer, hey, thank you very much for the opportunity for the zero down, but I'm tired of watching my student loan balances go up because of the interest. Please sign me up for a $10 or $20 a month payment plan. Okay. Reason being, when you go to apply for a mortgage, there are programs that will use that minimum payment of $10 or $20 a month. If you have zero, they're going to take 0.5% of whatever the balance is. So if you have a $50,000 in student loans, 0.5% is $250 a month. It's going to count against your debt to income ratios down the road versus $10 to $20 a month. A big difference when it comes to your buying power when purchasing a home. Okay. So that's how I tell people to possibly set things up for student loans. Any loans that are in default, reestablish agreements. It's possible. I'm not a huge fan of this. And this is just reestablishing defaults for like auto loans, repossessions, things like that. Sometimes if you have those things and reestablish payments, and we do that before you apply for a mortgage, they will factor those payments in to your loan amount versus for your debt to income ratios versus asking you to pay the whole thing off. Okay. And sometimes it's better to do it before you apply for a mortgage. Next thing, forbearance terms, understand it. I mean, forbearance just means that it's out there. Okay. Your payments just are temporarily paused. Okay. It doesn't mean your interest isn't going up. Okay. We talked about that a moment ago. Here we go. We talked about utilizing income-based repayment plans. And the next thing, dealing with repossessions. Okay. If you have repossessions on your credit report, if it's an isolated incident, I've actually gotten people approved without paying them off lately. Okay. But it's got to be an isolated incident. More like you co-sign for, brother, sister, family member, or whatever, a friend, and they didn't make the payments. The car got taken. You weren't aware of it. But everything else on your credit is good. We can actually many times work around that. Okay. Sometimes we'll ask you to reestablish payments. And I get it. Sometimes if you are reestablishing, it's tough to pay something that might have been a lemon. I get a lot of people that buy cars, drive off some of these B lots in the area, and 30 days later, the engine gives out, no fault of their own. So, and there's nothing to do. So sometimes you can go back and renegotiate the balance to get a payoff. Other times it's just better, as painful as it is, sometimes to reestablish repayment terms, get you approved for whatever you're trying to do. If you're trying to purchase a new home, get you approved to do that. What you do with those repayment terms after we get you into a house, that's up to you. I'm not here to make some of these auto financing companies accountable for financing lemons. So I feel like there's a lot of people that co-sign loans for people that get left holding the bag, and a lot of people that drive off some of these lots with less than quality cars, with unfortunately no one to hold accountable. So now navigating bankruptcies. Okay. The good thing, well, first of all, there's two types of bankruptcies. There's a Chapter 7 and there's a Chapter 13. Chapter 7 is when you wipe the slate clean. Okay. That means you go into bankruptcy court, they wipe everything out except whatever debts you might reaffirm on. Okay. If you have an auto loan, anything that's a secured loan, they typically will ask you to reaffirm or hand the asset over. So Chapter 7, wipe the slate clean. If you ever have an option, choose the 7. Unfortunately, we can't do anything for 2 years after the Chapter 7, but the thing is you can start rebuilding credit right away, and it's very easy. It's not hard for me to get someone from a 350 or a 400 the day after bankruptcy above a 700 credit score in 1 year. Okay. But it's important that as we rebuild, if you do take on any like payment, because you'll get credit card offerings because they know that you can't do another bankruptcy for 10 years, I think is what it is. So you're a low risk. So you're going to get a few credit card offerings that are going to offer you $300 a month. Take them, use them. Do not be late on them. If you are late on any bills or late on any lines of credit after a bankruptcy, you get hit really hard. Those algorithms that generate your credit scores, they know you just got a bankruptcy pass. That's why they're going to let you rebuild quickly if you do it responsibly. Okay. And unfortunately, we can't get you financed till your bankruptcy is discharged for 2 years on a Chapter 7. Like I said, it's imperative no late payments on anything after that bankruptcy. If you were doing a Chapter 13, and that's where they take your debts, put them together, they negotiate the balances down, and you're paying back your creditors, it's more than pennies on the dollar, whatever, 50 cents on the dollar, whatever your trustee negotiates with your creditors. Okay, that's a Chapter 13. Now, once you've made payments to the trustee, because you're paying your creditors back, okay, and it all goes through a trustee, once you've made 12 payments to the trustee, you can actually buy a house. Okay, it's a little bit more tricky because we do need the trustee's approval, but I've never been shut down. I've had trustees push back on it, but once we lay the foundation, we can usually get, I've never been shut out. We've always been able to get people into houses. Okay, so sometimes it's work, sometimes it's quite easy. So now in a Chapter 13, it's 1 year after your bankruptcy starts, and you've got to make 12 payments to your trustee, and all those payments have to be on time. All right. Next thing, managing collections. We talked about this earlier. I'm going to go over it again. Collections over 2 years, leave them alone. They have less impact on your credit. All you're going to possibly do is invite them to update your credit report as showing a collection paid recently and push your scores down. You don't need that. So if it's over 2 years old, please don't do anything with it unless you've spoken with a credit professional and they suggest something otherwise, but that's rare. It depends on the size. If it's something under a couple of thousand, I tell people, let those sleeping dogs lie. Medical collections should be left alone. If it's under $500, it's probably not going to show up on your credit, and it's not going to get factored into your credit scores. If it's above 500, then we might want to take a look at it depending upon how old it is. And like I said earlier, collection accounts, 2 years or less, we want to take care of those on a case-by-case basis. Please do not pay them off without speaking to myself or somebody that's familiar with it, so we can give you an idea how it's going to affect your credit scores. Now, my steps. These are my steps for how I look at people's credit to get it up 60 points in 60 days. Number one, you want to order your credit report, freeannualcreditreport.com. 100%. Go out there, 100% free. Anybody that charges you, don't do it. They may attempt to charge you, I think, for credit scores. If they do, make sure it's your FICO score, okay? If it's not a FICO score, models 2, 3, 4, or 5, I think 9 too. Just go with 2, 3, 4, 5. If it's not one of those scoring models, don't pay for it. Okay. Those are the mortgage scores. Those are the algorithms they use in the mortgage industry. Ideally, we talked about, we want to look at your middle and your high scores. Those are the ones we want to focus on. So whatever credit reports have that middle or high score, that's where we want to be laser focused on. And we look at what are dragging those scores down. Okay. Now, if it's late payments or if it's credit card utilization, or we want to find out and we want to handle it accordingly, like I described earlier. It's also good to use some of those free companies out there. Subscribe to some of the free credit monitoring services. Credit Karma, yeah, they're there to sell you stuff. Don't do it, but certainly subscribe to their free monitoring services. You've got Credit Karma, you got Credit Sesame. There's a whole host of them out there. Don't pay for any premium services. We want them to alert you whenever there's any significant changes to your credit profile. That's all. We're just using technology to put you in a better spot and track your score. Now, remember, the credit scores you're going to see in a lot of those free platforms is not the FICO score. Okay, it's the Vantage score. It's the free score. Usually that's higher than what we're going to see on the FICO score. All right. Increasing your credit card limits. Well, they totally got this one backwards, so we'll have to fix this slide. So we want to decrease your credit card. Oh, I'm sorry. This is increasing your credit card limits. Okay. So what we can do here is increase the limits on your credit card. So let's say you've got a credit card, $300 limit and a $300 balance. You're maxed out. If you can go to your credit card company and get them to increase your limit to $1,000, now your credit utilization's at 30%. Okay. A little bit more tricky in this environment because, like I said earlier, credit card defaults are a little bit higher and credit card debt is trending up too. So highest levels we've ever seen. So this is a tough thing to do right now. I'll be upfront about it. Set up payment arrangements for collections if they're over $2,000. Talk to somebody first before you do that. It's not always necessary. It used to be that was the go-to, but we certainly want to do that before you apply for a mortgage, if at all possible. Common mistakes to avoid. Avoid new credit applications. Just because Credit Karma gives you your score and an 80% chance you can get approved for a credit card, don't do it. We don't need another inquiry on your credit with a maybe. Okay, we want to work with good, predictable results. Okay, not 80%. That 80% doesn't work for a lot of people. Okay, so don't fall for it. Okay, because what will happen is you're going to get an inquiry on your credit. It's going to be a hard inquiry. It's going to drop your scores 5 points, and that 5 points can make or break you. I would rather you go to someone that's definitely going to get you a card. So a secured credit card or something like that. So reason is a lot of the programs that I work with regards to down payment assistance and grants, it's a pass fail. When I say the scores have to be at a 600, it's got to be. I've had people come to me, 599 credit score. Sorry, it's not going to work. We got to go back and find a way to get it up a point. Could take another 30, 60 days. So don't apply for credit unless you know you're going to get it. And don't blindly pay off your collections and avoid paying off your credit card balances totally. So, for example, you've got a credit card, let's say a $300 limit, and you think, oh, I'm going to pay it down to zero. I mean, it's good, but I would rather see you pay it down to $10. Leave a slight balance on the card. I find people that leave a little bit of a balance get a 1 or 2 point lift compared to people that pay it down to zero. That's all. Okay. So I'm just going from past history. So leave a slight balance on there because it is a game of inches sometimes. All right. Building new credit. Secured cards, great way to go. Okay. If you do go out to Credit Karma, Capital One does a good job with it. You give them $300, they give you a credit card with a $300 limit. It's important you use it right away to force them to get that data out to the credit bureaus. If it is a secured credit card, make sure they report to all 3 credit bureaus so you can get the biggest benefit of it. Find out what that reporting date is so you make sure that those balances are paid down, ideally below $10 before it reports. So secured cards, great tool. Opening up a secured card in 60 days, you're going to see, a 20, 30 point lift in your credit by doing that. Secured personal loans, these are by far and away my favorite. Okay. They're usually provided by credit unions. Okay. So a lot of people have these in their backyard and don't even realize it. So secured personal loans typically work this way. You go to your credit union. They do this as a service, by the way. You don't have to be members there. You can apply. They'll make you a member, usually right out of the gate when you do this. And most of the personnel like doing it because they know how powerful they are. So what they do is for example, the credit union I work with is called Michigan First Credit Union. I'm in southeastern Michigan. So Michigan First Credit Union, I give them $525. They charge $25 to do it, so that's gone. They take the $500, they put that in a savings account and lock it down so you can't touch it. It's collateral for a loan. Then they take $500 and put it in your checking account. That's the loan. So it's going to look like you got $1,000 savings that you can't touch and $500 in your checking account. Now, you make payments on that $500 loan in your checking account over 6 months. So every month they're going to take $80 out of your checking account to pay down that loan. The key is that they report that to all three credit bureaus as a personal line of credit, which is one of the hardest things to get. I've had people's scores go up 50, 60 points in 90 days just from doing these secured personal loans. Okay. Absolutely amazing tools. Make sure if you go to a credit union, that's how it plays out, but usually it does. Okay. So love these tools. Actually, I did this one for my daughter when she went away to college, and even today, she still brags to her brothers that she's got better credit than they do when they're several years older. So I know firsthand how powerful those secured cards or those secured loans can be. Now, authorized users, another powerful tool to get some quick results to building credit, especially if no credit. Becoming an authorized user on a friend or family member's card can be very powerful. Now, I understand asking someone to become an authorized user, being an authorized user on their card, it seems like it's very uncomfortable. Who wants to go ask someone? It feels like you're asking to borrow money. I assure you that's not what we're doing. And that's not how you kind of set it up with whoever you're asking. I find that the conversation should go something like this, okay? First of all, we should talk in advance so I can get a feel for what needs to be done on your credit to get you in a position of where you want to be, whether it's purchasing a home or whatever. From there, I can tell you, okay, in this position, you'll qualify for X. Go add an authorized user and tell them, hey, I'm approved for a loan subject to adding another line of credit on my credit report. I don't need to borrow any money, but is there any way you can add me to one of your credit cards? That's how it goes. I just need an additional line of credit that's got a high limit, low balance, and great payment history. If I had that on my credit report, I could buy a house with my family right now. Who wouldn't want to help out a friend or family member when you start to put it that way? Okay. So authorized users, great tool. That tool works 90% of the time. So alternative trade lines. Now, this is for people that don't have things on their credit report. Okay. Suppose you don't have any credit at all. So what we do is we go and we ask for somebody to be added as an authorized user. Okay. And then in 30, 60 days, boom, you're going to get a credit score. Next thing we want to do, or we'll do this at the exact same time actually, is we want to get alternative trade lines. I want you to go to whatever account you pay your bills from. Okay. Whether it's a bank account with a bank or a credit union or an online company, or we want to go, or even if it's just one of the payment cards, debit cards, or whatever cards you have, we want to look at that card and see what things are you paying on a monthly basis. Okay. Are you paying rent, utility bills, any subscriptions? Okay. 6 months ago, I had a young man that was actually living in his future mother-in-law's basement. And he was a gamer, didn't have any credit, but he had great job history. So we added his future mother-in-law, added him because, they were going to get married. She wanted to see them get a house versus starting out renting. So she added him as an authorized user on one of her credit cards. Boom, he's got a credit score. But he's only got one trade line and it's not that old. Credit score was good. high 600s because she had high credit limit, low balance, and she had it for many years. So it was a great trade line to add. It was a great authorized user account. Then what we did is we looked at his bank statements, and he had gaming subscriptions. I think it was, what is the Sony one? PlayStation. He had Xbox. He had like this World of Warcraft. He had several different accounts. $9.95 a month. Boom, repeatedly coming out. We got 12 months statements from his bank account. Sent that to a third-party credit aggregator. They added that to his credit report. Now he's got 3 accounts showing that were paid as agreed and a high credit score. We were able to get him into a home in Mount Clemens, Michigan, got him plenty of down payment assistance money, and he got in with just a couple $1,000 out of pocket. So it can be done if you have no credit. Now, if you have no credit because what's on there might be negative, that's a different conversation. This is someone that ideally has no credit or no credit score, okay? Credit monitoring services. I'm a big fan. Credit Karma, okay? They're there to harvest your data and sell it, and they're there to sell you some credit services, be it credit cards or whatever. So don't fall for that, but use it for what it is, a credit monitoring tool to get you where you need to be. If you have difficulty, there's Credit Sesame. There's several credit monitoring services, but it's important that you manage your credit through there because there's some great tools that they have available. All right. Oh, here we're going to talk about using secured cards again. Once you get it, it's important that you set them up and use them right away. Next thing, benefits of secured personal loans. We just talked about that in detail, typically through credit unions. Credit monitoring services. Okay. They do offer comprehensive credit reports and scores. If you're going to pay for the scores, make sure you're paying for the FICO scores. Okay, the ones that they typically will give you, the Vantage score, it works, but it's a good gauge and a benchmark to work off of, but it's nothing that we want to say that's a high level of predictability of where you're going. Okay, there are actually credit simulation tools out there too, actually on Credit Karma. I don't know if it's on their mobile version. I'm positive it's on the desktop version. So, and keep in mind, a lot of these tools that you see out there, what you see on your mobile phone and what you see on the computer are different, okay? So you'll get more robust tools on the computer version, okay, versus the app. So with the simulators, you can play with things. What happens if I pay off this credit card down? How much will my score go up? If I paid off this collection, what's going to happen? Okay, but you remember my stance on collections, watch it. The only collections I'd run through the simulator are ones that are less than a year old, okay, because it might give you some good advice on that one, but I always run it past a third person. I would typically want to run some of that information, not only through the simulators that some of the free platforms use, I want to run that simulation through a mortgage company too, before we start paying off some of the collections. The other nice thing about having some of those online companies, Credit Karma, Sesame, things like that, is they have some identity theft protection features. So you're going to be alerted anytime somebody taps into your credit. So it really helps head things off at the pass with regards to credit theft or identity theft. Here, popular monitoring services, Credit Karma, Credit Sesame, and Experian. Okay, if I had to pick two, I always tell people, pick up Credit Karma. Credit Karma gets their data from from Equifax and TransUnion. Equifax and TransUnion for Credit Karma. And then Experian obviously uses the Experian data. If you go to both of those places, you're going to have all 3 credit bureaus monitored. Okay? So that's my suggestion. Sometimes Credit Karma doesn't let everybody in if you haven't used your account in years, and then you might have to go over to Credit Sesame. Okay. Credit restoration companies. Okay. I do not like to say I dislike things very much, but I don't like credit restoration companies, and they are surfacing because credit is starting to deteriorate in this country. So credit restoration companies promise you the moon and the stars. Okay. Do not use them. Okay. There are a handful of credit restoration nonprofits in this country that do a good job, but I can assure you right now they are overwhelmed. So credit restoration companies start to advertise late night. Hey, you can't sleep, credit cards too much, give us a call. We'll take care of that for you. So what they do is they tell you that we will negotiate the interest rates down on all of your credit cards, and we're going to negotiate the balances down on all of your credit for you. Don't worry about it. Well, what they do is you sign up for them, and they take all your credit cards and put them all on notice. Hey, ABC Credit Restoration Company's helping John Collins. Please don't bother him anymore. And he's now going to be sending his money to us, and we will pay you once they strike a deal. Not sure what the verbiage is on that. But what happens is now you start sending your money to this credit restoration company, and they lead you to believe that they're going to negotiate the balances down, which they do, and they're going to be sending the money to the creditors, which they eventually do. But what they do is for the first 6 months, all the money you send to the credit restoration companies, that's how they get their profit. They take that money. They don't send it to your credit card companies. They wait until those balances are negotiated. In the meantime, your credit's getting wrecked. Okay? It says in credit repair or credit restoration, it's going to say that right on the debt, on your credit report. And it's going to show how late you are. Now, once that credit restoration or shows up on your credit report, it's the same as being in bankruptcy. You're not going to get any credit. Okay? And then what happens is that money you send to the credit restoration companies, after several months, when your creditors are finally fed up because they're not getting paid, and they say, that's it, we're done, we're going to send letters to them and say, hey, that's it, we're suing you for it. That's when they start dripping the money out to the actual creditors. Okay? Please don't do that. If you are in that type of financial position, I always tell people bankruptcy is there for a reason. So if it's going to show up on your credit report that you are in credit counseling, is what it says, and you're going to be treated like you're in bankruptcy because it says credit counseling on your credit report, you're better off just doing a bankruptcy and at least having the protection of a bankruptcy court where no one can call you or bother you. Okay? So that's my personal feeling. I've seen a lot of people taking advantage of these credit restoration companies, and they wake up and like, what the heck? And I'm like, I'm sorry. There's nothing I can do until you're out of that. And by the time you're out of that, you're probably going to flip it over to a bankruptcy anyway. So please, these restoration companies are sharks. Okay. I'm not going to go over this again. Some of the credit repair companies too. We talked about that earlier. They charge $100 to $140 a month. Don't do that. I mean, you can actually dispute things on your credit. You can go to Credit Karma and dispute things right now. Okay. But when you dispute things, sometimes you'll get a false positive on your credit. So if I go out to Credit Karma and dispute a couple of things, and by the way, if you have 10 things negative on your credit report and you dispute 10 things, nothing's going to happen. It's a slow, methodical process. Dispute the things that are inaccurate first, okay? 3, maybe 2 or 3, 4 at the outside. I find if you dispute 5 or more things, the credit bureaus have some protection. If they take your request as frivolous, like, oh, there's probably not 10 things wrong with this credit report, they can just discard your request. That's it. So you got to make it sound real. Do 2 things at a time. 3 things at a time when you're disputing. All right, alternative trade lines explained, non-traditional. We went through this a little earlier, okay? There's different things that can be added to the accounts. Rent payments and trade lines can be added to your credit report. There's actually a few platforms out there that do it. I think Experian even does it. Experian Boost can actually take things and have it added to your credit report. They charge monthly fees, like maybe $10 or so, but well worth doing. Utility bills as credit through boosters. Like I said, Experian Boost, I think is what it is. Great tool. Subscription services and trade lines. Like I said, I told you about that gaming young man. All of those subscription services can be added to your credit report. We just want to make sure that they've been paid on time for the last 12 months. Okay. We talked about the role of the authorized user. All right, I need to redo these slides. Anyways, this is the first time I'm going through it, so I apologize. Here is the strict approach for credit, or structured approach, excuse me. Understand the industry. Familiarize with your credit scores, credit bureaus, and how they impact financial decisions. So we want to know what your credit scores are on all your credit bureaus and get a clear vision of how that's going to affect whatever approval process you're looking for. For me, I work well in the mortgage world, so happy to help people on that side, especially when it comes to connecting with different down payment assistance programs and grants. So we want to look at your utilization. Okay, can we manipulate your utilization? Pay those things down for a quick spike in your score. Do we need to open up personal loans? And we want to make sure your monitoring services are all set up. Next step, we want to set clear goals. What's it going to take to get that score up 60 points in 60 days? Is it going to be introducing new credit? Is it going to be secured cards, secured loans, or paying down some credit, or bringing in an authorized user? Those are the quick tools that we went over today. With regards to taking action, we want to address these derogatory marks if at all possible and manage your collections and establish payment arrangements when necessary. Okay. The good thing is when you have these credit monitoring services set up, it'll help you monitor your progress. If you do challenge things with the credit bureaus, you will get things in the mail giving you the status of it. Okay. If you file too many, remember that's frivolous. Don't do that. Okay. These reports will keep you informed and let you know your steps every step of the way. Again, those credit monitoring services are great. Every time you peek at your credit score on there, it doesn't count against you. So you might as well do it. Okay. Now, I'm just about over my 1 hour limit, so I apologize. A lot of stuff jammed in here today. So if you have any questions, please never hesitate to hit me up. Okay. I actually enjoy helping people fix their credit. Okay. It's not as challenging as you think. There are so many tools at our fingertips that we can use to bounce your credit scores. I actually wrote a book called No Credit, No Problem. If you ever would like a copy, just text me. Hit me up. I give it away for free. Okay. And I hope to have my credit webinar done in the next couple of weeks where we will actually go out to freeannualcreditreport.com, show you how I downloaded my credit report and take that and upload it to artificial intelligence and the command that I use to spit out certain things. So really, really powerful tools out there that are at our fingertips where you don't need to pay hundreds or thousands of dollars for credit repair or credit restoration. So there are a lot of tools out there that you can use to turn things around very quickly. Okay. So just because your credit report score is low right now, it's just a number. Okay. Don't let it define you as a person. We can get things turned around very quickly. And when I say quickly, typically under 6 months. Okay. A lot of people, like I said, 60 points in 60 days. When I say that, I mean, it's you'd be surprised. That's actually fairly easy with everything that I showed you today between credit utilization, credit tools, authorized users, secured loans, you name it. There's tons of stuff out there. So never hesitate to reach out to me. I'm going to throw my number 248-252-7283. Never hesitate to reach out to me. I am a glorified phone jockey. I'm on the phone a lot during the day. So shoot me a text. I do have a lot of calls that get scheduled, that get rescheduled. Life gets in the way of everybody's plans. I totally understand that. So if someone can't make a call, I love calling people as soon as they come in, because I do not like a full inbox at the end of the day. It's kind of a pet peeve of mine to return everybody's phone call by the end of the day. So any questions, never hesitate to reach out. All right. So I've got a couple of questions in the box right here. Great. Asking, what if you have 830 credit but can't prove income? Wow. Great question. So I will tell you, can't prove income, reach out to me. Okay. 830 credit score is actually, it's huge. Okay. I'm not going to understate that. So anytime you can get a credit score above 800, congratulations. There's work that goes behind that. So that doesn't come very slow. It's a slow, methodical process of doing things right. So, but there are some no income programs out there, not too many that will apply for the DPA side, unless we start looking at possible grants. So I would encourage you to reach out to me. Let me put this is a different chat, 248. There you go. Just passed my cell phone number along. So please hit me up on that. That's a little bit more in depth, a little bit more detail. It depends on what you do for a living sometimes and how long you've been in the industry. And there are some programs that can do it. And what you're trying to accomplish. Are you trying to buy a primary residence? So several different options out there. Or if you're trying to do an investment property, there are actually tools out there for that too. So reach out to me. Happy to learn your situation, put myself in your shoes, and let you know what I would do at least. So appreciate the question. All right. Well, after 10 o'clock. Any other questions before we tie it up today? All right. I'm going to give you one more. Let me give you a link to, actually, I'll go out here. You can actually catch a lot of my webinars through my website, owntheroof.com. So if you go out there, I'm going to, I actually am doing another webinar for my Zero Down, and this is the registration link here. We put that in the chat box. So if you ever want to go to one of my free webinars teaching you how to purchase with very little money out of pocket, this is how to tap into all of the grants and down payment assistance programs, how to structure the deals, things like that. So good. All right. Well, if you ever have any questions, never hesitate to reach out. If you're looking for the replays, these show up on YouTube Live and Facebook Live. So hit me out on there on Own the Roof, and have a couple of webinars coming up next week. Monday, LinkedIn Lunch and Learn with real estate agents. If there's any agents that happen to stumble across this, I get a lot of agents that reach out looking for help on that side for their customers. And then Wednesday, Zero Down webinar. And then I'm going to be out of town for a little period of time, but follow it up on March. I think we're going to have about 20 different webinars, different topics, really diving into the weeds to teach people how we are successful tapping into these grants and getting home ownership for people that are just tired of renting. So Anyways, I appreciate your time here on a Saturday morning. I'm in southeastern Michigan. Beautiful day outside. Looks like weather's finally breaking, and we are into the 40s today. So more importantly, we've got some sunshine. So any questions, please feel free to reach out, whether you're looking in 2 weeks, 2 months, 2 years, makes no difference to me. I'm always here trying to teach people, teach them up, coach them up on how they can get into it, and build that hope, because right now that's the thing. I find there's a lot of people out there promising things, no shortage of scams in this world, but there are a lot of options out there for purchasing homes, tapping into grants and down payment assistance programs. And I do this credit building webinar as a service because I find there's three things that typically hold people back from purchasing. Okay. Number one is the money. Okay. And I always tell people the money is the easy part with all the down payment assistance and grant programs. The next one is credit. That's why I do this credit building webinar, to teach people that, hey, your credit score does not define who you are. Don't let it be that way. We can teach you how to get that score up very quickly. And then the third thing is income. Tends to be a hurdle, but there are, if your credit is high and you've got the assets, then, they're a little bit more flexible on the income side too. So, but it also depends on what you do for an occupation, how long you've been in it. There's other tools like that. And I'll go over that in details, especially for, it looks like Tyson had a question earlier. So anyways, we'll wrap it up for a Saturday morning. Hope everybody's able to get outside and enjoy the beautiful day. And hope our paths cross again soon. And hope I see some of you on Wednesday. Have a great weekend. Goodbye.